trader who understands how to read, how to interpret, and trade chart patterns can confidently excel in any financial market. And I understand you might be wondering why, but I said this because chart patterns are the very core of every major price movement. They connect trends, they review market psychology, and sometimes or most times actually give you a roadmap of where the price of the market is going next. Chart patterns aren't just limited to the function of interpreting market trends or telling you when is the market is going. They are one of the very core things you need to understand and master for you to become a professional trader. In this video, you are going to learn everything you need to know about chart patterns and how you can get to master them to trade with them like a professional. In the course of this video, we are going to break things step by step. And by the end of this video, you would be able to understand the different types of chart patterns used in trading. Number two, you will understand how price data is being read and interpreted for market trading purposes. You would also get to understand and know the particular type of chart that matters in making trading decisions. The one you use when you want to set up your entry, the one you use when you want to analyze the market as a whole, and the one you will use while you are trading. And above all, you would also get to see the market the way professional traders do. And after that, in the next video, we are going to go deeper by showing practical examples, powerful analytical tools, and strategies that are used by pro traders while trading. So join me in this video, come closer, let's dive right into this and make sure you stay to the end. In technical analysis, there are different types of charts that traders use. We have the line chart, we have the bar chart, we have the candlestick chart, and we have the point and figure chart. Now, while all these type of charts that I've mentioned all have their own places and particular advantage, the most commonly used charts are line charts, bar chart, and candlestick charts. So now, let's break them one by one, starting with the simplest and the very beginner-friendly one. A line chart is created by plotting only the closing price of an asset over a particular period of time and connecting these lines together with a dot. And this particular feature of line chart makes it one of the easiest, simplest, and best to use for beginners while trading because of its simplicity. Now let's consider why line charts matters. Line charts matters because they help you identify trends clearly by clearly showing the overall trend in a particular chart or market. Another thing is line chart makes it very easy to quickly spot support and resistance line in the chart. And they also make it very easy or easier to spot patterns like flags, the triangles, tops and bottoms, heads and shoulders while trading. So the key thing here is line charts easily highlight the demand and the supply zone in a particular market. And above that, they help you filter out all the noises in the market, making you quickly know what and when to actually enter the trade, making your decisions quick and faster. However, with all of this, line chart is not the best, and it also has its own limitations. So let's talk about the limitations of line chart. So the number one limitation of line chart is issue of missing data. Line chart only shows the closing price. It doesn't show the high, it doesn't show the lows in a particular market or in particular market pair that you want to trade. So in turn and to that effect, it brings this oversight or creates an hidden space of you being able to understand and see the volatility of the market for each day, understanding the highs, understanding the low. And as much as line charts help you see the clearer picture of the market, it is not okay to use when you are trying to make your entry. That is, know the particular point at which you are going to enter the trade or set your stop loss or your take profit. Another thing is line charts gives false signals. Apart from line charts giving you missing data or hiding the market volatility for you. Another thing market and line chart does is it gives false data. For an example, it hides the breakout. It hides the breakout in a particular market pair or in a currency pair. So while you're trading and you might be trying to watch out for your breakout, line chart is going to hide that for me. And at the same time, it also hides the false breakout in the market. So while you might be looking at the market to want to continue in a particular pattern because of what you've seen on the line chart, it is very important that you also check it with other types of chart to confirm if the pattern is actually true or just a false breakout. So while line chart is good for simplicity, it doesn't tell the full story of what is going on in the market. And I would advise you check out the practical examples and application of line charts, which I recorded in this video. Now that we've discussed the very beginner friendly type of charts, let's move into something very much, professional or technical. Let's talk about the bar charts. A bar chart represents each trading period or a time frame. What I mean by that is maybe a daily, hourly, 4 hours, 10 minutes, 15 minutes, 30 minutes time frame. When we say time frame, we're talking about a time measurement of the volume of data that is represented on your screen. So in a bar chart, a particular bar, you display the bar right now, a particular bar does what? Represents a particular time frame. Maybe a 30 minutes, a day, a weekly, a month, a year, or even a minute. Now that we've talked about what a bar chart is, let's talk about what bar charts actually show in the market to you as a trader. So basically, a bar chart contains the high price, which is also known as the top of the bar. It also contains the low price, which is known as the bottom of the bar, the opening price, which is a small tick to the left, and then the closing price of that particular time frame, which is a small tick to the right. Like you've seen it in the description that is popping up on the video, you can see the open price, the close price, the small tick to the left, and the small tick to the right. So what bar chart does in actual sense is it gives a complete picture of what is happening in the market in a particular time frame. And that is one of the reasons why bar chart is very, very much advantageous over other types of charts. So if bar chart is very advantageous, now that we've understood that bar chart is great and have some real advantage, why don't we discuss the proper advantage of bar charts in depth for you to understand, not just because you want to trade with them, but for you to have the proper knowledge of how bar chart works and why you should use it. Bar charts are useful because they show full transparency within a time frame. No hidden data, no false breakout, no hidden supply and demand or hidden pattern. Bar chart helps give you a clearer view of the market's volatility. It helps you to see the intraday volatility, the highs, the lows, and everything that is happening in the market. It also provides the opportunity for you to track the market trends. That is, you can actually see the highs, you can see the lows in the market for each time frame. It also provides the ability or the advantage of you to track the trend strength, the strength of a particular trend in the market. So you can track the trend by using the higher highs, the lower lows, and all. If you don't understand what an high high or a lower low is, I would advise you check out this video that's popping up right here where I actually explain what an high high or a lower low is in the course of a market structure. So you might have to go back to that, watch this video, then come back to this. To say more, bar charts are more precise in revealing the supply and demand in the market. They are more precise in this by providing more detailed price information, even better than line charts. You know already, there is nothing that is 100% perfect. So that gives the room for the imperfection of bar charts. So now, let's talk about the limitations of bar charts. Number one is the fact that bar charts can be quite difficult to interpret, especially for beginners, because of the ticks, the tick to the left, the tick to the right. It might make it quite difficult to understand, grasp, and comprehend, especially for beginners. So I'll say bar chart is not beginner friendly. Another thing is it takes more effort to actually identify if a trend is bullish or bearish while using bar charts. And the last thing I've come to understand when it comes to bar chart is there is a level of limitation to spotting some particular types of pattern when using your bar charts. The line chart has the advantage of quickly spotting out patterns like the triangles, the flags, the heads, and the shoulders for you. But in terms of bar chart, there are few patterns that bar chart can actually reveal to you, and it actually even takes more effort to quickly see these patterns. Except you're a professional, you might not quickly identify these patterns. So as much as bar chart has a lot of advantage, it also has its own disadvantage. And if I'll sum it up, I'll say bar chart is not beginner friendly. So those starts with bar charts. Candlestick charts. This is where things begins to get very interesting. Candlestick charts are the most popular amongst modern days trader because of its functionality, and I believe everybody agrees to that. Candlestick charts originated for Japan, and I would say it is a more visually appealing version of bar charts. So to be on the first side, you can say candlestick charts emanated from bar charts. but it is a better version of bar chart when it comes to visual representation of data. A candlestick chart shows the four basic traditional data a bar chart shows. That is the high, the low, the open, and the close. Much as everything I've said so far kinds of bring the similarity of candlestick and bar charts into play, the difference is not in the visual representation. Difference is in how information is being represented by each types of chart. The way information is represented on bar charts is different from the way it is represented on a candlestick chart, which is going to lead me to tell you how the candlestick works. So here on the screen is a sample of a candlestick. Each candlestick has two main parts, and on the candlestick chart, a thin line, there's a thin line on it. That thin line is called the shadow. The shadow shows the day's price range from the high to the low. And there is a wider, or let's say a filled portion of the bar, which is called the real body, or let's say the candle. Now, what this real bar represents or shows is the measured distance between the open and the closing price of the asset within a particular time frame. So let's say this candlestick we are seeing represents a 30 minutes data. So the open represents the opening price and the closing represents the closing price of the particular pair you're looking at or you're using the candlesticks for that particular period of time. So if the close is higher than the open, then the body, the color of the body is going to be green, which means it is bullish. But if the close is lower than the open, that means the market actually went down and is going to be presented either with a black or a red candle. So to understand this, basically, whenever the opening price of a commodity is higher than the closing price, that is called a bullish candle. And if the closing price is lower than the opening price, it is called a bearish candle. As you can see, side by side is a pictorial example of a bullish candle and a bearish candle. I believe you can see the differences. And it is very important to know that the color may vary depending on your chart set. Having understood the concept of candlesticks and how to interpret candlesticks, let's talk about why candlesticks actually dominate the market. Candlesticks are not just modern day traders' favorite. It is not just a function of, oh, people are influenced to use it, or because a particular trader is using it, that's why I'm using it. They are very, very, very important and dominate the modern day trading system or market because of their futures. Because they make it easy to see the market sentiment almost instantly. Like once you see the candlesticks, you're seeing the color, you see the green candle, you see the red candle, it brings something, it triggers something in your head. Once you see the green candle, you know that yes, that is a bullish sentiment for the market. Once you see the red candle, you know, oh, this market is actually bearish, the price is going down. So because of the graphical representation and the color presentation attached to candlestick patterns, it actually gives a direct visual and understanding of the market sentiment at the very first glance. Candlestick make it easy to also spot patterns like the pin bars or let's say the rejection candles. Candlestick gives the advantage of combining both clarity and detail together. So you're not just seeing the details, you're having clarity. The market is lucid, the information is lucid to you. It is very, very, very easy. You can see it, and the provision of the clarity and the detail while using your candlesticks make it beginner friendly. So it is easy to identify, it is easy to interpret, and at the same time provides clarity and the full information you need, even at the very first glance. So if I would say, I can advise you to start with the candlesticks. And one last thing is, candlestick is quite dynamic on its own. So because it doesn't just represent the data, it has a particular technique to it. It interprets the function or let's say the action in the market. For an example, if you are having something like a doji, it tells you something about the market. If you see a candlestick like a tweezer, it tells you something is about to happen next. And what are these things? For an example, you see a tweezer, you should know that a candle, any candle that follows a tweezer is going to repeat itself at least once or twice after. So let's say for an example, you're trading on a daily candle and you see a tweezer, you should know that the candle that comes next after that tweezer is going to put or determine the trend or the direction of the trend of the market for the next few days. So the candlestick just doesn't provide the details. It's almost like a forecasting tool. Yes, it's a forecasting tool and you need to understand it, which brings me to the fact that for you to quickly and fully get the concept and harness the full potential of candlesticks, you need to read the Candlestick Bible. And also, here's the thing. I want you to know that anything you can do on the bar chart, you can do that and even more on the candlestick. So one of the reasons why I said candlestick is beginner friendly is because it gives the advantage of you not having to go through the stress of learning the difficulty of bar chart. The simplicity of the candlesticks gives you the advantage like you're using the bar chart, and at the same time, you can just get to use it even as a beginner. Now that you've understood the concept of line charts, the bar charts, and how candlestick works, I believe you know you are beginning to get to see the full picture of the price structure in the market. But here's this truth. The real game changer in trading comes when you combine this knowledge you've just gotten from this video with chart patterns. And you knowing how to combine this knowledge and everything together to make the best trading decisions. So it's not just enough for you to get the knowledge, it's not enough for you to understand. You must know how to combine this knowledge with chart patterns, which is exactly what we are going to be covering in our next video that is going to come up after this video in this particular playlist, the technical analysis blueprint that is specially made for you. And don't forget to like this video, drop a comment if you've learned anything at all. Or if you didn't learn anything at all, which I believe is not going to be true, or you want me to talk about or teach or cover a particular topic of your interest, or maybe you just have a question you have been wanting to ask, I'll be waiting in the comment section and I'm very glad to answer your questions. So don't forget, like this video, subscribe to this channel, and turn on the notification bell because the next video is going to be very important and is going to bring the icing to the cake of what you've just learned. So till when next I come your way, stay cool and play